That'd be under settings. Good.
All right, well, by the way, I was wrong yesterday about Thursday. You're right. We're taking the day off Thursday for Veterans Day. So if you try to log in, you won't be here. Also, I looked it up. It's 56 cents a mile the IRS will give you for mileage. So if you're a small business, you can do that. Or even if you work for somebody, the deal is you can take the mileage or get reimbursed by your employer. So if your employer pays, they can pay you. Or if they don't, you can track it and then deduct it. But that doesn't count driving to and from work. But if they send you to the store or out to see a client or something, all that counts. So if you itemize, you can keep track of that. And as we'll see in QuickBooks, QuickBooks will allow you to track it, and you just have to keep a log. And now, since it's online, you can also put it on your phone. Now, the people I know who try to use this software on their phone don't like it. It's too small. But something like mileage isn't too bad if you just keep it to the mileage thing. But doing all this on there, it's tough. You can also do it on the Chromebooks. We tried it just in case we needed to use them for classes. And again, it works. It's okay. Not as good as the laptops. All right, so today we're going to start working a little bit more advanced things with our customers. So once in a while, the business will run into the scenario where a customer wants a refund, either a refund or a credit. So you're allowed to create any credit you want in QuickBooks. And it's real easy to do. In fact, it's so easy. It's one of those things you got to be careful of, because that's one of those things that could be quite dangerous. If you had an employee who's just creating credits here left and right and then selling them for half off to their friends, that would be pretty bad. So again, that's one of the trusted things about being a bookkeeper. And when you're creating them, they're just like anti-invoices. They do the opposite of an invoice. So we'll go ahead and do that. Let's go into our sales and customers. Or if you want, you can use the new button up here and do new credit invoice or a credit memo. But we'll just do it through here because this is what we've done our invoices from. I'm going to go down and pick editor. And you'll see I got my drop-down list here. And you can use the pick list. Actually, it's not on there, is it? All right, so I lied. You have to go up here to new. And you'll see credit memo under customers. I thought it was the short screens too. On the desktop version, you can access it from either place. But we'll just go new and under customers, credit memo. I'm going to hit the function F5 here to refresh my screen. Yes, I know. Now, on my screen, it's acting a little weird. Let's see if that cleared it up. So when I clicked on the credit memo, I don't know if you could see it, but it came up with 2 options for expenses. So when that happens, I'm just going to close it out and try it again. I don't think it was a QuickBooks error. I think it was my browser error. But better be safe than sorry. So it's new, credit memo. There it comes. So you'll notice at the top, the numbering starts wherever you left off on your invoices. So it doesn't start over again. Like yesterday, as we were working with the documents, it started over again because the estimates was a new system. So like I said, the credit memo is directly related to invoices, the anti-invoice, if you will. So it's going to use the same numbering, which is fine. It also means when you flip through your invoices, you'll also see credit memos stacked with them. So you can pick your customer, any customer. I said I was going to do editor. And everything else works like the invoice. Down here at the bottom, you can select the product that they're either returning. Now, if they're returning it, you would have an inventory issue. In this case, we're not physically going to receive it back. So let's say it was defective. I'm going to do one flashlight. So it's not worth my time to try to call the vendor and say, hey, you had a bad flashlight. It gives a bad name or something. So I'm just going to toss it, right? So I'm going to pick your item, any item. I'll pick one flashlight. And if they pay tax on it, this should be checked. And if it's checked, it means you're going to give them back the sales tax. So that can be important, because if they're not keeping the product, then you're technically unpaying for it. So if you're going to unpay for the product, you're going to unpay the sales tax too, and they get a credit for that. That also means you won't be turning that over to the state, but that's appropriate because the customer didn't get the product. So everything else is going to work the same. You've got the message to put on the credit memo, like, sorry, it didn't work out. You can also put a message to the statement. This credit memo was issued, or when you, for one flashlight that was broken or something like that. On the right-hand side, it does the calculations for the sales tax. Now here comes the tricky part. It's incorporating the sales tax based on current information. If they purchased something that had old sales tax information, you may have to adjust it manually. We're not gonna have to worry about that, but that can happen because a lot of sales tax laws will kick in like either July 1st or January 1st. So what'll happen is if they bought this in December and paid sales tax on it, but in January now, sales taxes went up, the computer system is gonna automatically do the current sales tax. So they'll actually get more back than would be appropriate. So in that case, you kind of have to be aware, and QuickBooks won't catch that. But you can manually adjust it here. And just like you can always adjust the rates if you needed to, but most of the time you don't. However, that said, it's pretty rare. Pretty rare you're doing a credit memo in the first place, hopefully. But also pretty rare that it transcends a change in the sales tax. But just know if it does happen, it is possible to go and do that. And it's one of those things you just kind of have to keep a heads up on what's going on in the real world.
Well, technically, this is what that rapper Travis Scott is doing.
Yeah, he's doing refunds for everybody.
He's doing the refunds
Yeah.
because he canceled the second day. So
yeah,
he technically has to do these.
Yeah, that's right. What'll happen though, so the credit memo, this is going to stay open on their account. That's more of a refund, direct refund to the people.
Oh.
And now, since I'll bet all those transactions are credit cards, I'll bet nobody paid cash.
Yeah.
It's somewhat easier because it's all electronic, and they'll just say, return all the transactions, and they'll go back to their card. But yeah, it's similar. In this case, the credit memo is going to stay on their account until they use it out. And actually, you have to apply it to do that. You're going to see that in just a minute. So I'm going to save and close. And it'll say credit memo saved, done. So now let's go back to our customer list and see how it affected the customer. Yeah, so now you're going to see a negative. That's okay. So you think, oh no, it's a negative. Well, there are times where a negative is appropriate. Yeah, on this display, it's going to. But it is keeping track. You'll also see now it's going to count as an open invoice up here as a negative $5. So like, you think, oh no, it's negative. Well, that's okay. Sometimes that happens. And then as I scroll down here, see what happened to Eddie here. You'll see he's got the minus 512. Oops. So yeah. So that'll stay there. If you ever are curious about it, you can always click Eddie. And you'll see the transactions. And currently its status is unapplied. So this is a circumstance where you're essentially saying, it's like when you try to return something to the store and they say, do you have a receipt? No, we do. Okay, we'll give you store credit, right? And they give you a little card sometimes now. So it's like a gift card. So you'll see here, it says unapplied as a status. So it's waiting to be applied on a new purchase. Just like that gift card, if the customer loses it, forgets about it, it'll stay there forever and ever and ever until somebody uses it up. So it's up to the customer to purchase something and then tell you, by the way, I want to use my credit. A lot of times what happens is, especially if something for $5, it'll get lost. So at some point you can go close it out. And in California, I believe there's a threshold. It's like $10 or not, it's pretty low that at any point the customer can come back. You can't say it expired. Because for a long time what stores were doing, they were doing this more on gift cards than on credits, but they were doing it for both. And that was, if you didn't use it in 3 years, it'd be no good anymore. So they want to keep tracking. Plus, they get to keep the cash. And for a store, this negative kind of just floats out there and it's deducted from their current income because it's not a sale yet. Now it probably will be turned into a sale. So it's kind of an annoyance, right? But California, we have special laws, and that's one of them. So like I said, I forget the threshold, but there is an amount. And if you go through like your dresser drawers or something and say, hey, look at this card, I wonder if it's still good. Go try it out. Odds are it'll be good if the store's still in business anymore. Yeah, that makes a difference. So that does happen. All right, so that shows us why it's a negative. Okay. So we're ready to use it up. Let's go and create a new invoice. So you can do it any way you like. This time, I can use this screen to create invoice, or you can go up here to new and select invoice. Either way. All right, so you'll see our invoice number is now one number above what we were for our credit memo. So this is them placing an order with you to buy something else. So go ahead and pick an item, make it more expensive. The total dollar should be more than what the credit is. It's not always, but in this case, to make it easier, we're going to. So I'm just going to select flashlights again. I'll make it 3 because I returned 1, now it's buying 3. You'll see there's no reference here to the credit because this is not the payment area. So it's like the invoice to say, hey, it's none of my business. I'm not even going to show it here. So we'll save and close. Okay. Now, at the top, you'll see it's going to say 1 open invoice, right? That's because that negative is smaller than this, the total, the absolute value of the negative. Also, if you look down at Eddie, you'll see it's only going to show the 1025 portion. Okay. So he owes me more, or he owes me 2 flashlights worth of money more than he's going to get back in the credit, but it's only going to show you the net in that screen. To see the details again, you're going to have to go back. Okay, well, that's no problem. So I'm just going to go to Eddie and say, all right, now he's going to pay off the remainder. So I'm going to receive payment. Here's where it gets tricky. So the payment screen looks the same, except for one thing here. The original amount is the total dollar amount for the invoice. And then the payment it's expecting here and the amount received it's going to default to is deducting that credit memo. Okay. So that's what you normally do. Say that's fine. You know, everybody did it right. It's all good. However, like I said, if they forget the credit memo, what they'll do is send you the full amount, the 15, what I got, 1537. So they'll send that check with that payment. Then you have to call them up and say, hey, did you guys know you had a credit? Oh yeah, that's right. That's on my desk. I'm sorry, I forgot. Okay, we'll do it next time. All right, just go ahead and use that check, right? So then what you would do is manually override the amount received to be the full amount. So you'd wipe this out, say, no, it's wrong. And what it will do, I'm not going to actually do it, but I'm just going to show you how you would. It'll still show the credits sitting out there, right? The next time they have to remember to short the check. Switch it back here. You'll notice at the bottom when I changed it, it said amount to credit. Right now it's 0. When I put the full amount received, the 1537, down here at the bottom, it puts the 512 back. And it also tells you down here, oops, kind of just crossed it out, but it's just going to give you the warning. And then, like I said, you made the phone calls, so you know. And sure, next time I'm sure they're going to remember. So here's what you got to do, by the way. As you know, any of these documents you can print out. If you're still doing paper transactions with Eddie, what I would suggest is next time you send them the invoice to pay, staple a copy of the credit memo to it. And you put the credit memo on top. So when they get it, they'll see that, oh yeah, that's right. And then when they cut the check, they'll incorporate it. So I'm going to go back here. And everything else on the payment is the same. So I'm going to save and close. And now if I look at Eddie, 0 balance, all good. And I can go into Eddie's transactions and see how they come out to 0. So I've got the credit memo, the invoice, and then the payments. You will see there's an extra payment here. It says created by QuickBooks. And what it's doing, it's counting for the double entry bookkeeping journal in the background. It's counting those almost, well, that's 2 separate transactions. So that way it can close out here the amount still owed on that credit memo. Okay, so it's all automatic. That's the good news. Okay, does that make sense? All right. So let's do another scenario though. This time, we'll pick a customer. And we're going to go up to new credit memo. This time, the customer is not, they're going to return something, but the credit memo is going to be larger than the amount they're paying on the next invoice. So they're going to have leftover credit. And that can happen too. So here's that scenario. First part, very easy. Click, pick a person to give a credit memo to. I'll do share and share alike. This time, I'll do something a little more expensive. And this time I'm going to do a quantity of 2. Now, it doesn't have to be like for like. Like when she comes back, I'm going to give her credit for 2 baby Yodas. When she comes back, she might buy flashlights. It doesn't have to be the same. We just happen to do it here because it's kind of easier on the numbers. And at least makes more sense. Okay, again, sales tax. good. Save and close. When we go back, here's our minus $43 for me. One open invoice. Okay, so this time I'm going to go back. Where is she? I'm going to create an invoice. But I did 2 dolls this time. She's going to collect 1 from me. She's going to pick up 1 doll. So my quantity is 1. And again, same deal with the sales tax. Save and close. Now, even though I have that 1 invoice, see, it's still going to show the amount from the amount left over. And if I look at her information here, she's still got that minus $21.52. So here's what we're going to do. I'm going to go back and create another invoice. Here comes. I'll do another doll. And save and close. So in this case, it took 2 invoices to burn up that negative dollar amount. So you can see here, now she's back to 0. And like I said before, we're doing it to keep it even. This makes it pretty easy. But theoretically, she could have a huge credit and burn it off slowly, a little bit at a time. Just depends on the circumstance. And that's just one of those things you got to keep track of. And having that negative there is kind of helpful. It never hurts just to thumb through opening balances. What'll normally happen though, if you have a lot of invoices that are pending, this dollar amount won't show the negative. Because if you have a whole bunch of customers, a whole bunch of orders, and a whole bunch of invoices, that's $5,000. My $21 negative amount is not going to appear there. It's not going to show as a negative up in this spot. So you can't use this tool to say definitively, I have no outstanding credit memos. Actually, today I can because otherwise it's 0. But in a normal run of a business, that won't tell you it. What it's going to have to do is you're going to have to scroll down here to see it with the open balance. And let's see, what if there is a negative here? Let's see, if you have any open invoice, any open credit memos, a negative number has to be here. The reason is, like, even if they paid you too much and had a negative here, it's still going to be an over amount that you owe them. Okay. So in the case of customers, when you see the 0 here, that means you don't owe them anything. They don't owe you anything. If it's a positive number, that means they owe you something. If it's a negative number, it means you owe them something. The funny thing is, on vendors, it's the opposite. It goes the opposite direction, but it works the same way. Any questions on that? Okay. So let me go to her report. You'll see again, it marks everything as closed and paid because they balanced each other out. So that's a good thing. You want to see that. There is a way when you set up security in QuickBooks to limit who has the power to do credit memos. The reason it's there is because, as I mentioned before, and as you could see, it's basically like printing money for your store. And if you have somebody who's careless or trying to sneak out some money, that's one way to do it. Because when you receive these, they're as good as cash. And I think I mentioned this in the last class, that most theft that occurs at a company, it's not shoplifters, it's employee theft. And I find time and time again, it's employees just taking a little extra, stealing office supplies, or doing something like this, where they realize, ooh, I could do this, and I could do a whole lot of these. Have all my family come in, and be different customers. So again, that's one of the reasons when somebody takes a vacation, and now they try to get all the bookkeepers to take their vacation days, because then somebody else comes in and sees the books and has to use the books on a day-to-day basis, then these kinds of things pop up all the time. What is this, boss? Boss says, I have no idea. We'll have to call the police to find out, right? Okay, so in my products and services, though, oh, I'm a low on something. Oh, my laser pointer. Because I didn't do an inventory return, my numbers are just going to go down instead of up. The other way you could do this is you could remember how we adjust the inventory on hand? If you're going to put it back in inventory, if it's a return you're going to put back in the inventory, you can make that adjustment. So I'm going to do that now for my baby Yodas. So remember how to do that. Go to your items, use the pick list here, and adjust quantity. And put in $2. And for my memo, put in returned item, or returned items, because there's two. Now you'll see it still defaults to inventory shrinkage. That really wasn't inventory shrinkage. However, unless you're going to be doing a lot of this type of thing, you just leave it at the one account, and it pretty much comes out at the end. If this is going to happen a lot, then you have to deal with other tax issues, and so you might set up a separate account just to track it. I'm going to save and close. Now I'm up to 22, so that's good. Okay. So now essentially what we did is did a return. On some things though, there are rules about what can be returned to the shelf and what can't be. I mean, food, like if it's a bag of shrimp, you have no idea what happened to that bag of shrimp. Did it really go straight to a freezer, or did it sit out on their shelf and then they put it in the freezer? Things like that. So what a lot of times what they'll do is just destroy it. Certain computer things, like if it's a laptop that you're selling, and they buy a laptop, it usually has to go back to the manufacturer. You can't take an open box and just put it back in, put some tape on it, and say done. Now, if it's a screwdriver, no problem. You can just put it back in its package and stick it on the shelf and resell it. But there are certain things, there are certain rules on it. And if you're in that industry, you have to know those rules, that they just can't go back on the shelf. Or if they do, you have to mark it as an open product. Okay? And you can put a discount on it, but you have to tell the consumer when you're buying this, it was an open product. So like when you're buying computers, like Dell computers, you go to the Dell website, one category they have is refurbished. And refurbished means it came back to them. Now it could have come back to them because it was a terrible computer and didn't work, but they supposedly fixed it. It's like new. On the other hand, it could have been just like we had. Somebody opened the box. This is not for me. It works fine. I just don't like it, and brought it back. It still has to go through the refurbishment. It just makes it easy on the refurbishers. They say, oh yeah, this is fine. and then they can rebox it. But again, it has to be in the other category, can't be sold as new again. So that does happen a lot. And one of the reasons you'll see stores will start putting limits on what can be returned is just because of it. For a lot of things, they'll just throw it away. If it's any food or items that could spoil, I know Walmart will just throw it away. They'll take it back and, you know, make it sound like, oh, we're happy to help you, but at the same time, you know, they don't want to take any chances that it's contaminated. So those are getting tossed. If it's a durable item, they will. If it was a seasonal item, so if you're bringing back something after Christmas, they know, well, we're not going to save it till next year. We'll just throw it away. Costco has a great return policy. And somebody told me they knew somebody who took back, they bought a live Christmas tree before Christmas. And then, to me, this takes a lot of guts. After Christmas, they went back and did a return and they took it. They gave them a full refund. And of course, it went in the dumpster. But I guess they didn't like it after Christmas. But yeah, that's kind of pushing it. And that's, like I said, sometimes it's just a few people who can ruin it for everybody. If that keeps happening, you know, they're going to all of a sudden have a rule and there'll be a sticker or a sign on the tree lot that says all Christmas sales are final. This is an exemption to our policy. There was, is it LL Bean? I think it was LL Bean. I don't know if you heard about it. Last year or the summer before, they have a rule that if you buy their boots, any point, send them back, they'll send you a brand new pair. Yeah, good deal. And that was kind of their thing. You know, we're the Old West outfitters, and they had rough and tumble boots, and we know, you know, our people are really hard on them. And people liked it. Now, not everybody took them up on it. And that's how it managed to go for so long. I guess they had it for 120 years or something, that policy. And so, you know, they kind of carried it. It's their character. It gave a better feel for the brand and all that. Well, thanks to the internet, people started spreading the word. And what people started doing is going to yard sales. And if they found their boots, they'd buy them for $5. And then they'd send them back in and say, okay, I want to swap them. And they said, all right. There was no questions asked. So that was their policy. So here they'd send out, you know, $120 pair of boots. And it happened a lot. Again, if it happens once or twice, no big deal. But it happened a lot. So they had to say, all right, after 120 years, we're changing our policy. I think you get like one exchange or something. I mean, they still made it pretty generous. And if you have a receipt, you know, you're better off. So that's why if you do something like that, put the receipt in the box, leave it there, and then if you ever need it, it's there. But yeah, like I said, some people spoil it for everybody else. But for a while, that was a good way to get a nice pair of boots. So that's when those policies kind of backfire. So any questions on how we just did that? All right, so let's practice it a bit. We'll make 3 credit memos to different customers. I mean, don't make all the credit memos for one customer. That'd be too easy. Then we'll do 3 invoices for those customers greater than the credits. And then we'll receive the payments and apply the credits for the outstanding balance. Again, the computer will automatically assume that you're using the credit memo, so you actually don't have to do anything. And what you'll notice is the dollar amount that it's applying will be less than the actual amount of the invoice. So we'll try making 3 of those and see how it goes. A new credit memo. And pick any customers you like. Now, just like before, if you want to, you can save a new and do all three credit memos one after the other. Or you can do one, do the invoice, receive the payment, and then come back and do the process over again, whatever makes it easier for you to remember how you do it. If you forget who you did, just look at your customer list and they should have a negative opening balance or negative open balance, pardon me. Oh, there she is. So you can tell they're all covered when the opening balance or open balances are all in the positive. And then you just receive the payment like we normally do. You see the differences here. So when you create your invoices or your credit memos and the invoices are larger than the credit memos, remember that the outstanding credit is going to be burned up. So now when I go and receive the payments, when I'm done, the balances should be 0. When you're all done, customers should be balanced down to 0. Or I guess up to 0 if they were negative. And then once again, you can always see the credit memos if you go in the customer history. So at 6:55, it'll be break time. We'll take 10 minutes, come back at 7:05. We'll do a couple more things with our customers. All right, so we're back. So everybody get all of your credit memos done? Now, when I did mine, just to be different, I didn't necessarily use the same products. As I mentioned before, that happens all the time, where they can have a credit memo for one product, but it's applied to something else they buy later on. So it's a kind of a universal credit memo. It's not specific. If you wanted it to be so, though, let's say that they brought something back, they wanted to return it like for like, but you were out. So, but you knew they were coming in next week. So you say, okay, here's what I'll do. I'll issue you a credit memo, come back in, it's only good for that product, and then come back and do that. So you'd have to put some kind of notation on there, and hopefully, all your clerks are mindful to look at the notes. But on invoices, on credit memos, you can put a note on it that prints on directly on it. It says only valid for, in my case, flashlights or whatever. So that way, it's a way to control it, especially if you start feeling that somebody's taking advantage of it. The other way that these things can come back to bite businesses is it's not so bad anymore because paper checks have kind of gone the way of the dodo, but it used to be that you could take a paper check in and buy something and then take it back and get a credit off of it. And then if you ask for a refund, get it in cash. But what happens is, it turns out that checking account they wrote it on initially was bogus. So the check bounces. The business gets a fee for that too, because the bank's upset. They try to process it. And it just costs a lot of money and a lot of hassle. So that doesn't happen much anymore, especially now that even paper checks, they're run through a machine to check them. But it still can happen. In fact, credit cards don't balance out for at least 24 hours or at least over midnight. They accumulate all the transactions, and it'll tell you if there is no balance in the account. But sometimes, depending on who's doing it, let's say an evildoer has $100 in their credit card left. So they come in to your business and they buy something for $95. Well, they've already bought something else for $95 at another business. At the end of the processing, when they balance out, one of them is going to come up short. So that's one of the reasons they started including those holograms on there, the cards, and you have to now insert them rather than just swipe them, because it's more secure and it keeps track of the transactions as they go along. So you can't do that. It's called mining the float between when the transactions are recorded to when they're actually processed. And again, if those people who figured all that out put all their emphasis into creating a new product or a new service, they'd be rich, and we'd have flying cars everywhere. Because that's, to me, that it takes more work to do all that than it is to come up with something else that's useful. But anyway, that's one of the things you have to be careful about in a business. It used to be too that whenever there was any kind of credit card fraud like that, the credit card companies would take the hit. So they wouldn't charge the business. And of course, they wouldn't charge the customer, because the customer's gone and probably never existed in the first place. When the new chips came out, we saw this. Our credit card processor said, that's no longer going to be the policy. They won't cover losses unless you did the chip. Meaning, if you just swiped the card or typed in the credit card number, then you're on your own. It comes back to be fraud. They would pull it from your account. If, though, you use their chip process or their chip scanner and put the card in and it came back fraud somehow, then they would take the hit. So, yeah, it's one of those things that, credit card companies, as much money as they make, they don't like to lose money. So they're going to protect themselves too. Well, hopefully that never happens to you. So let's go back to our customers. I'm going to look at all my customers now. So one of the things we could do with our customers is, as you're working with them, your customers can have what are called like sub-customers. basically have other names underneath them, but they're going to be responsible for the account. A lot of times that is going to be when they're doing a like a new project or something. So one of the things you can do with a customer is, let's bring up our customers here. So I got Mike here. You click on the customer name and you should see this here, projects. So that's what we're going to work on next. Now, when you pop this up the first time, it'll give you lots of suggestions and start your first project. And that's actually what we're going to do. The project is basically, in this case, Mike. Mike has two things I'm going to do for him, or one special thing. It doesn't have to be multiple. It could be just one special thing. And basically, it's as if it were a customer unto itself, even though Mike's going to be responsible for it. So you're essentially herding all of these transactions together under this project, which is going to be under Mike. So that way, it's like I said, it's kind of like a sub-customer. And you can do as many as you like. This happens a lot in construction. So I think I gave you the example. If you're going to build an add-on bedroom, and then you're also going to build a pool, and then you're also going to build a new garage, all kinds of things. So that's, you get a good customer, you got repeat business. You might want to set up these projects separately to track them. And then the customer as a whole, at the end of the projects, will be able to tell you how much you spent and what they still owe you. So to do that, I'm going to pick Mike. You can pick anybody. And you should see on the right-hand side, add project. Oops. So we're going to do that. So you're going to give it a name. Now, this is a name that's just basically for internal use. And it's going to identify it from everything else, like in this case, Mike does. Now, it doesn't mean Mike can't come in as a regular customer and just buy stuff normally. He can do sales receipts or invoices just like he normally do. So I'm going to put in party planning. Okay, I can change the customer from here, but of course that's the right one. If you want to put in any notes here, again, this is just for you to remember what it is. And I'm going to click save. So then you're going to get all these transaction statistics. And at the top, it'll say it's in progress. In progress just means it's active. And then down below, what's the income and cost on this project? Right now, it's nothing because we haven't done anything with it yet. You'll also see what's currently open and what's overdue. This one on the online version of QuickBooks, you get this little profit margin. That's it's kind of misleading because it doesn't count your general activities. It'll be only for the costs with this project and the income for this project. But it would include a portion of the electricity, for example, or the rent, a portion of the rent that you'd have ascribed to this project. So that doesn't count as regular overhead. So as much as it sounds like, wow, look at these projects, we're making all this profit. You are on the projects themselves. However, it's not incorporating your overall costs. So you're going to like your net costs. But it's still interesting to see. All right, so this is currently our only project. You can always look at the project list here and see the different ones. I'm going to go back to my customers. You will also see on the left-hand side, you've got a projects tab, so you can access it that way too. Either way works. And then now, when I click on Mike, because he's my project, I can see underneath it, there's this party plan. Otherwise, the project works just like a customer. It can be invoiced, it can be have sales receipts, anything. By the way, I forgot to mention this on our credit memos. Credit memos can only be burned off by invoices. Sales receipts, it won't work because sales receipts doesn't use the accounts receivable system. So if they have an outstanding credit, they come in with a sales receipt. Remember the sales receipts, they walk in the store, they're going to pay for it, go out, and you're just generating the receipt. You wouldn't do that. What you'd have to do is create a quick invoice and do that. The customer probably wouldn't notice the difference, but it has to be an invoice. So I did forget to mention that. Sorry about that. Okay, so on our projects, let's create an invoice for Mike. So I'm going to go to invoices. Actually, I'm going to go customers. I'm going to create invoice. And here it comes. So when I use my drop-down list for customer, it came up with Mike, but you'll see underneath that party planning. So there's my project. So I'm going to select party planning. In the customer box at the top now, it says Andy, Mike, party planning. So you know, this is Mike's deal, but it's a party planning project. So in my case, he's going to start off with 10 flashlights. That's good because I only have 12 left. Everything else as far as the invoice is exactly the same. Now you'll see when I look at my customer list, it's going to show his balance. That's a balance that includes all outstanding invoices for all his projects. So it adds them up together. And then at the top, you still got the open invoice. This doesn't indicate whether it's a project or not. It just means if they're open or not. So I'm going to click on receive payment. The payment's going to work exactly the same. Now, what might happen is, we've just been assuming it's been a check, but the payment method, kind of the unspoken thing here. But they might set up a special credit card for this payment for these projects. So if they do that, then you have to be aware, and they're supposed to tell you that I want to pay for it with this credit card. So they would send you a note or some kind of credit card information. A lot of companies now, if you do this send down here, well, I actually can do it here at the invoice. If you send it via email, you can also send that link, which means they can pay for it with a credit card. Then they choose the payment, and you don't have to worry about it. But we'll just leave that blank for now.
Also take a partial payment here.
Sure. Yeah, just like it's just an invoice. You could do partial payment. You could do set up installment payments and things like that. So I'm just going to save and close. So really, it sounds complicated, and actually can be complicated if you have a lot of projects, but it's really not. And it's meant to be a better way to organize things. And like I said, if you're in the construction business, this happens all the time. Yeah. But even attorneys. Okay, I'm going to sue my neighbor because he's ruining my lawn. So there's that project. Then he says, I also want to sue my employer because they're making me breathe bad air. Okay, there's another one. So you could set up these are basically like different accounts, and you want to keep them separate because, well, especially in a lawyer's case, when they get the final tally after the cases are resolved, it might make a huge difference how many costs went into each lawsuit and whether they won or not. So you could also do this like doctors. Once you get into that, though, you really need to change your QuickBooks because we set it up, remember, for retail. And if you do that, you can actually go back in the setup and tell it it's a doctor's office. And then you'll get that. It's a smoother transition, and they don't call them projects. It's patients and then different things on the patients. But it works essentially the same way. All right, so he paid it. Now I'm going to click on him again. Click on his projects. And ta-da, there's my income, there are the costs. And there's supposedly my profit. The profit is just income I received minus the cost of the products, not of anything else. You'll see there's also, you can look at all the transactions in a short view. You also have a chance to look at the time activity. If you are billing time as, say, an expert, like in my case, I'm the expert party planner, and I will give you 10 hours at $50 an hour. You can actually set it up here to do that. Now, we haven't done any time, but it is possible to do that. And then it mixes it in with everything else. And then you can run the reports, see profitability and the time and costs and anything that's unbilled. We don't have anything unbilled and everything has been paid, so that's good. So we got a 20% profit margin going on here. And then if I go back to Andy, you'll see in the customers and the regular things, it doesn't show it's part of the project, except here in this category, where it'll tell you if there is a project. But as far as the regular transactions, it doesn't really show, like in the customer activities, it doesn't really distinguish until you get into that level of detail. Okay, pretty easy. All right, so now let's go to our expenses and our vendors. And when mine load up, all right. So here's all my vendors. So now I'm going to go to my ABC warehouse and I'm going to order things for this party. However, because I'm doing it this way, it's going to be a special circumstance. So in this case, you can do it as a purchase order. So we'll create a purchase order to ABC warehouse, just like we did before. So for me, I'm going to pick laser pointers as my product. I'll say 5 of them. Good thing because they're sold out. Okay, now you've got customer project. So I can use that pick list and apply this directly to my party planning project. That's hard to say 3 times in a row. Party planning project. So we haven't used this before. Click on Save and Close. So now we've got one outstanding purchase order. The process is going to work similarly to what we did before. We're going to do the open purchase order. Let me go back here to my vendors. There it is. I'm going to create the bill. I'm going to add my purchase order in. And you'll see that carries over. One of the things you can do now is you've got this little knot. So if you decide you don't want to apply it to the project, that was a mistake, you can remove it from here. But we'd want to keep it, so that's it. So we're going to save and close. And then when you pay it the same way before. So I'm going to make a payment. Save and close. Okay, so now when you've ordered the items, you can call up Mike and do it that way. Now what that's doing though, it's basically dedicating those items to this project. So then you can turn around and sell them and create an invoice for them. However, it's, you probably, depending on your circumstances, would just keep things on your shelves and take them off the shelves and use them for various projects. But there are times where you need to do a special order. And this is a way to do that and assign them to a certain project, especially if it's a new product you don't normally carry. I'm going to click on Mike again. Let's go to projects. So now we're going to do a little practice. Do a different color to distinguish them. So make 4 projects for 4 different customers. Then create 1 invoice for each project. And then receive the payments to general checking. So when you're done, again, the way we have it set up, all the balances should be 0. So they're basically on a project, it's essentially the same as if it were the customer itself. You can set up multiple projects under one customer. However, you cannot set up a project under a project. So remember how I said it's the same thing as a customer? That's the one thing you can't do with a project. So if I create new project, and I go to customer, you'll see it only gives me the customer names, not the projects themselves. There are times when you need to do something like that. So again, using a construction example, if you are building a whole new office for, say, Apple Computer, and under that office, they want to set up a project for, like, say, a special meeting room, and for some reason they want it separate from the regular building, you can set it up as, building project A or something like that. Just do it in notation. And then you just have to remember when you're using it to use it as a separate project. When you want to run the reports later, you run them separately and then combine them in something like Excel. So it's still possible. There's a workaround, but it's not designed to do that kind of level of sub-projects. Excuse me. Okay, so when we're done, should have 3 projects here. Oh, 4, I said. I'm short one. Doing it one. So I'm going to set up an anniversary party for area here. Save. Sell them some hand sanitizer because I have a lot of those, and everybody needs hand sanitizer these days. All right, so there's my 4. So once you completed the project, right now, these are only the open in progress projects. And if we use my pick list here, you can show everything. So you can cancel a project, you can complete a project, it can still be pending, and you can show, just like we can make customers inactive, you're basically making a project inactive. Again, it's not going to delete anything, but it's going to say this project is done and not show up on some of your activities here, unless you say all statuses. So I'm going to go to my first one here, Mike. And you'll see under options, there's a couple things you could do. You can edit the project, but all it really does is let you go in and edit the notes or the name. In the standalone version of QuickBooks, you can actually attach files and things to it. So that's kind of handy. In this case, I'm going to mark as completed. So now you'll see on my list, I only see the 3 that are still active, or it says in progress. I can change that by changing it, my list here, to completed, and it shows the ones that have been completed. Or I can do all, and that shows everybody. And you'll see in the status category, it says that this one's completed. Oh. So I've got that one completed. When I go back to my customer list and I click on Andy, all the transactions are still there and the project's still there. So it's not deleting it, it's just not showing it. I don't want to say hiding it, because hiding it makes it sound like, ooh, what's it hiding? It's it just doesn't, it's trying to organize your lists so that you can kind of keep things organized better, because you don't want to see a whole bunch of completed projects, especially if you do a lot of projects and they just be all over the place. So the ones that are done essentially don't show up on the list. And in fact, I'm going to go to invoices real quick. When you go to invoices, you'll notice I closed or concluded Mike's project. So now when I look at my pick list, you'll see the project doesn't show. And that's why, because I told it we're done. So, right? Why would you bill something that's not done? Let's go back to projects here. I want to show all. You'll notice that even though I marked it as completed, I can still turn it back to in progress. So it's in some systems, it sounds like when you close it, it's a done deal forever and ever. In QuickBooks, it's not. And you can always go back and mark it as in progress, and it just puts it back on the list. So that can happen if somebody prematurely closed it, or if they wanted to expand the project some more, you didn't want to create a new one, you just want to keep it under this project, you can just reactivate it. So for now, let's go back. And for your final task, change colors here. Mark all but one project as completed. You can choose the project, whichever one you like. So I've got 3 completed, 1 in progress. And if I change the list to just show the ones in progress, I should only have 1 show up.
Default to in progress.
Yeah, yeah. The reason is that's the ones you really care about. The ones that are done are kind of just for history's sake, but you know, they're still there. All the transactions stay there. Once you insert a transaction, as when we dive into the journal, you'll see that it's really hard to delete something in QuickBooks. You can reverse it, but it doesn't actually remove what was originally there. It shows the original transaction and then the reverse. It's kind of like when you void a checkbook. You mark void, you cross it out and everything, but it existed and showed what happened to it, but it was voided out. So, you know, same with the transactions. And you want that because sometimes the transactions are voided or changed incorrectly and you need to undo it. Or a period of time can happen. And you'll see this when we go back and start changing, like let's say you did a typo. Instead of $10.36, you typed in $10.63 and didn't catch it, right? So there's a credit there. And then you don't catch the credit till a couple weeks later saying, well, it's this little negative 20 cents or whatever it is. And you go into it, you change it. QuickBooks will warn you that other transactions have occurred since then, and changing this might affect them. Are you sure you want to do this? Well, in this case, you know it's a typo. So yeah, no problem. But in other times, if you deposited some money, 2 months ago, and now you're trying to reverse that deposit, that's going to mess up your checking account, or conceivably mess up your checking account. So it does give you warnings on those kinds of things. Any other questions? All right, no other questions. We're done for the day. So we're able to set up our projects and create credit memos and learn how to embezzle from the company. Actually, that's how you can catch embezzlers. Go into the credit memos and see if there's an excessive amount. By the way, I did say QuickBooks records everything. And if you remember, QuickBooks tags the username to each transaction. So if one person is creating a lot of credit memos, when you run the credit memo report, you'll see who's been making them. And maybe it's legit, maybe it's not, but everybody's name's to it. So have a good evening. We are done for the day. Tomorrow, we're going to start working with vendors. Do a little bit more advanced things with our vendors. You're welcome. Have a good night.